All right, guys. Hey, my name is Philip Warwick, and welcome to my first deal, which ultimately led to millions. In this podcast, we explore the pivotal first deals in real estate and in business that define what type of investor that you are. Whether it was your first deal that inspired you the most or a challenging one from which you learned valuable lessons, each story that we share is unique. We interview very successful investors, local real estate groups, business moguls, authors, and celebrities from all over the world, providing inspiration and insight, whether you're a seasoned professional or you're just starting out. On today's episode of My First Deal, which ultimately led to millions, I'm sitting down with Jordan Reyes, real estate investor, RV park specialist, and an AI enthusiast who's flipped, developed, and acquired over 250 units. He's passionate about helping 5,000 people to build a strong financial foundation and achieve true freedom through smart real estate investing strategies. So let's dive into the first deal that you did and what brought him here. So Jordan, welcome to the show.
Thank you, Philip. Thank you for having me.
Awesome to see you again, man. So let's get started from the very beginning. I like to ask, what was your very first deal and what lessons from that experience guide you still to this day?
So my very first, well, I've had a few firsts. My first business was actually a well drilling business. So for my first experience in the entrepreneurial world was well drilling in California. Now my first real estate deal came somewhat out of that. I had done a couple of things after that, and I had a good buddy of mine who was a fix and flip guy and did a number of fix and flips in California. And I was trying to figure out and get into real estate. I didn't, but he was literally the only person I really knew that was doing it. And I would seen some videos and I was like, man, how do you wholesale and how do you do all this? Like, that sounds amazing. No money. I don't have to have anything. And so he was the only person I really knew in the game. And so I just talked to him and, at that time I was kind of looking at maybe it's a commercial building and we can use it and we can rent out half of it. Like, man, that'd be cool. And I didn't know what I didn't know. And we had sat down, had lunch, and he didn't know anything about commercial, but he had always wanted to do more on the new construction side. And he just said, hey, would you like to partner on it? And I was like, yeah, that sounds fun. I don't know anything different. And so we started doing new construction together. So that first, opportunity, just saying yes to it, really led to us building, I think we did about 40 or 50 projects, anything from single family to multifamily, basically from Central Valley of California all the way into the Bay Area. So that was my introduction into real estate.
Wow, y'all did 40 to 50 properties as JV partners together.
Mm-hmm.
That was your intro.
Yeah, anything from, like I said, a single family duplex. We did a couple of 8 units, 22 unit. So a couple of different size projects.
Right on, man. So do you do those flips still?
So we still do some flips. I'm in Montana now, so most of our stuff is Montana for the flips. We will do new construction, but we've really been focusing the last year or so on RV parks.
Really? Okay. Well, let's talk a little bit about that. I know you flipped and you've developed and acquired more than 250 units. Is that right?
Yeah.
Okay. So talk to me a little bit about these RV parks.
So RV parks are the under the radar, the newest, I would say, or the last kind of frontier in the real estate world. I think that there's still a tremendous amount of opportunity for people. There is a lot of business acumen that goes into the RV park space. There's a lot of different levers you can pull to increase your revenue and increase your numbers. And I didn't know anything about RV parks a couple years ago. I've never stayed in an RV. I've never stayed at an RV park. And I thought when I was first getting into it, it was really after all of we built everything on spec essentially. So we built everything to sell. Again, like where I started, I didn't know anything about real estate. I didn't know about wealth creation. I didn't know about like holding them, or anything like that. I was just kind of doing, the action, right? Just figuring it out as we go. And so when I left California, I was like, man, that was cool, but I don't really have anything to show for it. Like, yeah, we made money, all of that stuff, but it's like I still have to work, I still have to do things to nothing that I can really pass down to my family and the next generation and the generation after. And so that's when I started to really study and look at, wealth kind of creation, and that was in the real estate space. And so I was looking for multifamily properties, and I was having a really, really hard time. And so when I found this RV park, the very first RV park, I don't want to say I thought it was multifamily, but I thought it was the equivalent of a multifamily project or property. And so I went in and I offered all of the same way that I would have on a multifamily property. And, we negotiated a bit back and forth, and ultimately they said yes. And, then I had to figure out what to do. Then I was like, okay, well, this actually isn't anything like a multifamily deal. So, but I still think that there's a tremendous amount of opportunity. I think that a lot of the big money is starting to catch on, and they're starting to play in that RV park space. But I still think that there is opportunity, more so than there is with the compressed kind of cap rates and cash flows that are in multifamily and some of these other asset classes. I think the last, like I said, frontier really is in the RV park space.
That's interesting. It sounds kind of more like you stumbled on that by accident. You weren't like searching for
A
RV
hundred,
parks and it
a
just
100%, 100%.
okay. So how did you find that deal? Like how did that actually like exactly how did that come about?
So yeah, I was looking for multifamily, and I had made a bunch of offers on different multifamily uh, properties, and kept getting turned down. And it was always, everything was trading at that time at 3 caps, 4 caps, 5 caps. And so I was like, man, I don't know how anybody makes money on these deals, because everybody was just kind of parking money at that point. And that's not what I was looking for. I was trying to create value and, create some upside. And so I just, when my offers would come in versus somebody's all cash offer, they would just throw my offer out the window. And I did find it online. I found that deal on Crexy, and I initially made an offer because it was probably the best one that I could find. It was like advertised at a 6 cap or a 7 cap. I can't remember at the time, but I was like, man, that's amazing. Multi units, a higher than normal cap rate that I'm used to seeing. Yeah, like let's put in an offer. And I actually on the first one got turned down because the broker had said, well, we just sold one around the corner at a 4 cap. And, after I made the offer, I started digging in a little bit more, and then I figured, man, with an RV park, I think they should be a little bit better cap rates, because that's what I'm seeing now that I'm like actively studying it. And so they originally turned it down, thinking that they were going to get another offer, a better offer. And about 2 months later, they actually came back and said, hey, would you still be interested? We didn't get the offers, because it was like right at the time everything was starting to turn as well. And so they ended up not getting the offers that they were looking for. And so they came back, and I originally said no, right? Because you have to. That's like sales and negotiation 101. You're not interested. And so he said, well, he actually also has another one like just down the road. And I go, well, that's interesting. So if you can package these together, then we're definitely interested. So we ended up negotiating on the second one as well. And yeah, so we put those under contract, and they were $6.5 million together, and $500,000 down, a seller finance deal. And then I got to thinking, well, great, that's a great deal, but I don't have $500,000, and I
Yeah,
don't know where I'm going to
100,000
get it.
problems.
Yeah. So, and that it was actually that same day that I met Pace Morby that day. And long story short, he was like, man, I'll buy those with you. And so then we started working on them together, and we ended up completing that purchase probably 3 months later.
Okay. Awesome. Awesome. Yeah, we'll get to more of that because that's exciting to be able to partner with Pace, obviously. And for those people that are listening that might be a little bit newer, explain kind of in layman's terms, like what is cap rate and how does that affect, the ability to acquire a multifamily or a RV park like this?
Yeah, absolutely. Great question. So cap rate, all of these terms, they're just terms that I think, I don't know who came up with them, but brokers, bankers, I don't know. Uh, they're just terms to kind of like muddy the water and to make it harder for, I think, everyday people to kind of get involved, because it's like, man, I don't know what that means. And still to this day, somebody will bring something up and I'll say, hey, well, the cash on cash is this, and this is what we're looking for. And I'm like, I don't really care, you know? Well, you have to kind of know those terms to start to play in the sandbox, if you will, and to even subconsciously build credibility. But the cap rate is essentially what your net operating income is. So your gross revenue minus all of your expenses, and you're taking that number and dividing it by the purchase price. And so people just use that as kind of the barometer to compare and contrast like properties. And in the commercial space, everything is valued not necessarily on a comp like a single family would be. It's valued on the value and cap rates. And so you do have to know it, unfortunately, but it's one of those terms that I think is just there to kind of muddy the water.
Yeah, yeah, that makes sense. And a lot of deals that I look at, obviously, just like with single family, there's no deal that ever comes across my desk with an asking price where we need it to be, right? We always have to
100%.
negotiate it and work back and forth. But, at what point do you just ignore a deal because it's at a 3 cap or is it a 4 cap, right? And, I've heard it said before, like, hey, we want to buy it like a 10 cap or above. Maybe we want to sell it a 6 cap or below. So where's that sweet spot, like when you're just kind of reviewing a deal before investing all of the time to really dig into it? Like your quick review.
So this is a tough question. When I get asked this question, I always have to give it with a little bit of an asterisk. So if you go to like on my Instagram and our website, you'll see our buy box, and it has things in there. It has things like, hey, we're looking for 200K in NOI, and we're looking for, our target is a 10 cap when we're buying, obviously. But I will say that's kind of just a quick temperature check for people to know what they're looking for and when they're sending us deals. But I've bought way less than that because I feel like I can almost create a deal out of any scenario. And so we will look at those numbers, the financials, but at the end of the day, if we can structure a deal, a seller finance deal, even if it is a 6 cap or an 8 cap, but our debt is 2%, 3%, and we have a low down payment, we probably can make it work. For example, that park that I was talking about, it was a 6 cap. No, like I said, when I was looking at other things, everything was trading what seemed to me 8 to 10, but we got our debt at 4.5%, right? Because we seller financed it.
From the seller.
Yeah. The one we're buying right now essentially has a 0% cap rate because it's losing money. But you're looking at pro formas and what you can do. And we structured the deal where it's favorable for both of us. We're coming in and we're buying it now, and we're deferring payments and doing some creative things so that it makes sense for us to do. So while we have our targets, it's hard to give that message to everybody and say, well, yeah, we could make a deal almost out of anything. So our targets are what they are, 10 cap and above, but you just use that as a quick kind of number for people that are trying to find deals for us and things like that, so that they can have something to shoot for.
Yeah. So if I were to like put it in terms, right, that would be understandable or to help other people understand, right? So that cap rate essentially is the cash flow that's left to actually be able to service your loan that you get on the property, right? So
Yeah. Yep.
if you've got a certain net operating income left, now that's what you have left. That's what you're going to pay yourself and for the financing to actually acquire that property, right? So
Correct.
the lower the interest rate, the better terms you can get with the seller, then the more you can pay for that property is essentially how you're looking at it.
Exactly.
Okay. Now, how in the world do you know when you're negotiating with the seller, like where to land on those numbers, man?
There's a lot of back and forth. The cap rate, the NOI, all of those, I like to say are to get us into that sandbox and to play nice with each other. But I don't really care as much, and that's kind of why I was saying that earlier, as they're just terms to kind of muddy the water. We don't typically negotiate on price, but when we are talking with the seller or the broker and we're talking about these terms, it's just to kind of put us in a position like we do know what we're talking about. Um, and we have some commonality, some common terms that we can understand between each other. But really, I'm just trying to figure out enough information so that they believe that we can, complete the transaction and do the deals. But it usually gives us enough credibility to where they open up and then we start discussing the actual reasons that somebody's selling and what their goals are. And so in a conversation, I just had one this morning, we probably spend 10 to 20 minutes just kind of surface level the terms and what's the cash flow, what's the NOI, all of those types of terms. And then we get into, well, what's your reason for selling? Like, what are you trying to accomplish? What's your ultimate goal? And that's really where the deal starts to happen.
Okay, got it. I love it, man. And every deal is different, right? And every deal comes with figuring out, hey, what's the problem that you're trying to solve, and really solving those problems, and make it more about that than the property itself and the cash flow, right? So, and I would venture to guess that these types of sellers, they're more open to doing creative terms and seller financing type things than your typical like single family home seller, right?
100%. And the reason being is they're a business, right? And so they're trading on those same terms that we're talking about. They're trading on a value and they're not trading on the feeling of like, this was my forever home or this was my family home. It has this other intrinsic value. Now, sometimes that does happen in RV parks. It's like, hey, I built this thing. I want my legacy to go on forever. But it's less about that most of the time and more about numbers and the situation that they're in now.
You got it. Pace always talks about like not being an ask hole, right? Like asking
Mhm.
all of these questions, but I'm sure other people are wondering, it's like, okay, how do you go from like just single family deals to, oh my gosh, you're going to manage this big RV park? It just seems like something that operational might take so much more work. So how do you operate an RV park and move from, single family and construction and rehabs and flips to doing a big scale project like that?
Yeah, so really you just have to understand where you want to be. I like to say that there's two types of investors in the RV park space. There's more of a lifestyle investor, and then there's more of kind of a business or a corporate style investor. The lifestyle investor is the mom and pop, you and me, that, hey, I just want this lifestyle. I grew up camping. I love the life and I love the destination or the place that it's going to be. I'm going to move there. I'm going to run it. I'm going to operate it. And yes, it's going to be a job, but it's my lifestyle and I enjoy it. And then on the flip side, there is, folks that are, and this is the category that we fall more into, is we are looking at multiple parks for cash flow and we have a team and we're buying multiple parks and things like that. And so not to say there's pros and cons to both. Neither is right, neither is wrong necessarily, but I would say for the individual to figure out like what you want to do, and you might start out thinking you want to do one, and you might transition to the other. But I think that's key is to know like what you are really looking for in the asset class, and then just this business and all business, in my mind, isn't about the numbers. It always comes down to the people. And when you start to think about it in those terms, it helps you negotiate better or craft a deal better. It helps you run a business better because now you're not just looking at the numbers, you're trying to solve actual problems. And when you're looking at it as more of a people business, it creates a scenario where now everybody has to win. Because I used to think that I had to have all the answers and I had to know everything because this is me versus Philip. I'm trying to get the best deal. And if I get the best deal, that means Philip's losing. And it's just not like that. And so when you go into a situation or you're trying to talk to a broker or you're making your very first calls and you're thinking like this is a zero sum game, it adds extra pressure. And when you go into it and you're just naturally interested in somebody else and what they're doing in their business and what they've created or built, it just makes the conversation go a lot easier. And that's most of the time where you can create those win-win situations.
Love it, love it. So you mentioned team, right? So I'm probably in that category right there with you. I'm not looking to live in an RV park or move and do all of the operations myself. So what does your team look like? What's it take to have a successful team, and how does that partnership or your org chart look like? Like when you do JV deals on RV parks.
Yeah, so I think that it's important to have some local knowledge. So our team is really, we have a director of operations who kind of oversees all of the operations, and then we have an asset manager who will go on site and kind of coordinate that, and then we have a marketing team, and so it's a collaborative effort. But then I will just let me back up to our asset manager who kind of controls our what we're thinking, what we're going to do, the brand, and keeping everything kind of uniform. That person will hire and oversee the actual on-site park manager. And so the park manager is doing and running the day-to-day operations on that specific park. Or if there's a couple of parks in the area, they're running multiple parks. But that person is going to be the person that's interacting with the customers, that's taking reservations, that's handling everything on site as far as the day-to-day goes. And so that's kind of what our team looks like.
Okay, all right. So how big is the team? You're talking
So
on-site
we
manager?
Yeah, so on each site, we might have one park manager, and then it's typically 1 to 2 maintenance landscape people. We have 2 people that support our marketing side, and then we have our asset manager and our director of operations.
Love it, love it. So what were some of like your key turning points, or like strategies that helped you scale from, into that like first large portfolio? Was it pace? Like, okay, you got the deal under contract, now you're partnering up with pace. Like, is that what gave you the ability to jump from, where you were to where you're at now?
100%. Again, it's all about the people and the partnerships. That's why I say this is a people first business. And there was a kind of key turning point for me, and it was, I remember sitting like in my kitchen thinking about, because this was literally the first day I met Pace. Like I didn't know Pace from really anybody. I went to a meetup. I had seen a video or two, but I wasn't like really following along. And so when he initially said it, we were at a meetup that was like 5 hours away from where the park was. And he was like, "Oh, I will be there on Saturday," and so I didn't know any of this. And so in my mind, I'm thinking, I don't know if this is actually going to happen. Like this could be something, we're at a meetup, I say the thing, does it really happen? I don't know. And so I remember sitting there and I was talking to like one of my really good friends, and I'm like, man, I don't know what to do. Like, this is a good enough deal that I think I could probably raise the money and partner with a couple other people. I haven't done that before, but I heard you can do that, you know? Or do I just say, let me give this to somebody, let me partner with somebody that is in the space, that knows it a little bit more, and I'm not going to try and learn everything by myself and do this thing all alone. And so I remember having that conversation with him and thinking to myself, you know what? What do I have to lose? Like on the flip side, I could completely lose the deal if I try to do this all on my own. Let's say that I do it on my own. I go raise the money, I partner with somebody. What does that look like for me? That means I am moving there, I am living on site, I am running everything and learning as I go, which is not necessarily a bad thing. But I decided at that time, let me give it to somebody who's got a team, who's got people in place, and let me just learn from it. And so that's what I decided to do. And it gave me extreme amount of insight into how an operation is supposed to run. It also gave me immediate credibility because now I am for sure closing on this thing because we have the track record, right? And now I can say, oh yes, I own that other RV park, or we're partnered on this RV park. And so people know, oh, you guys have already done it before. And so you immediately have credibility. So I would say that's the biggest turning point. And that was really the turning point, because even when I was working with my buddy in California, there was still an aspect of what we were doing where we were trying to get the best deal and we were trying to beat all of the competition. So there was not really a whole lot of collaboration, right? And so that turning point really was the turning point of collaboration over competition for me. And so that's what's allowed us to grow and to scale into multiple parks and to keep doing that. And then now we're at that position where we can do that with others. And so that's a really exciting
Love it.
spot to be in.
Love it. Love it. Now they're coming to you, right? So now you're the Pace to other people. But I've got to ask, man, did Pace already have RV parks in his portfolio before that, or was yours his first RV park?
I believe that was the first one.
Very cool. Yeah.
Yeah.
I just thought of that when you were talking. I was like, wait, but did Pace have that? I know he's got obviously team and everything and the ability to figure it out, right? But that's cool that you were able to partner with him and bring his first RV park. And now how do you feel about, all of the trainings that he's doing around this model? Do you feel like it's creating competition for you, or do you think it's adding value to you and what you're trying to accomplish?
Again, it goes back to collaboration over competition. I had, just another 2 calls today about collaborating with people, and there is still again, with what RV parks are currently and how many mom and pop shops there is still so much opportunity. And depending on what type of investor you are, if you're more on that corporate, there's so much opportunity to partner with other people. And even if it's too small, if you run into somebody that is looking more for a lifestyle type of deal, then now you can pass that on to them. So we just did a 2-day workshop where we showed kind of like everything that we do. And out of that event, we had the same conversation, and people walked away going, you know what? I think I want more of that lifestyle. And we've been helping them now buy parks, right? So they found parks. We were able to help them, parks that we wouldn't buy by ourselves, right? We would pass them along. That maybe they don't meet that criteria. They don't cash flow enough, but they do work for a lifestyle investor. And so we've been able to help those people, even if we're not involved in the exact deal or ownership or something like that. But that it's also created opportunities for us to partner on areas that we don't know as well. We're working on some stuff in, New York and New Jersey. Those were parks and areas that I would have just said no to. But now with everybody kind of learning trainings and coming to events and doing that type of stuff, we feel a lot more comfortable and confident. And so, yeah, it's more collaboration.
Okay. And so now compared to traditional real estate investing, is this your only focus?
No, it's
No.
not. Everybody likes to think it is, but we are buying businesses. We do still single family stuff. We have some co-living. We have some longer term and some short term rentals. I would say it's still our main focus is RV parks and on that acquisition right now. But we just had another offer go in yesterday on a mobile home park. So we are looking at other things, but our main focus is RV parks.
Okay. Love it. Love it. So you mentioned you're on the mission now to help 5,000 people to build their financial foundation, right? With real estate, creative real estate. What patterns do you typically see in people that are just starting out, maybe you're trying to go from single family to, multifamily or these kind of bigger deals? And how can you help them break through those first time barriers?
That's where I think a lot of people get stuck. And it's what we talked about earlier. It's about the things that muddy the waters and the big numbers. And what if they say this? And it's more of the hesitation and the inability to take action, I think, is what keeps people stuck. You know, whether you want to admit it or not, you're worried about what somebody else thinks of you. And I know it's this thing in your mind. You can tell people that, like, I don't care what anybody thinks, but I think there's always at least a little bit of every person out there that's worried about how you're going to look or how you're going to be portrayed, and that's natural. And so I think when you start looking at bigger deals and you're concerned about, well, what if I look dumb in this room, or if I don't know what to say in this conversation. I had another person that reached out to me on a car wash deal, actually, and I had asked her, I said, "Hey, so like, how far did you get in the conversation?" She's like, "Man, I haven't had any conversation. I know that they're open to it, but I'm just like so scared to make the call because I don't know what they're going to ask me. I don't know what they're going to want from me. I don't know what to say." And so I think that's where people get stuck. And so I said, "Well, let's just call them." So we just called them. I was like, "It's just another person. We're just going to have a conversation and we're just going to figure out like what they want." And I think that's where most people get stuck is they're afraid of what other people might think or say. And a lot of the times we think we're working, right? When we're studying and when we're watching videos and all of that stuff, it's kind of just keeping us busy, but it's not actually doing the work.
Yeah.
And I think that that can also play a trick on your mind. And I think that imperfect action is the way to go.
Okay. So taking action and partnering with other people that are already doing it, right?
Yeah.
Love it. Love it. And so now obviously you've grown with Pace and you're part of Owners Club, which is, what kind of brought us together, which brings high level investors and entrepreneurs together. How has that community impacted your growth?
Oh man, it's probably every day I have another new conversation and it brings a new level to each of us that is having those conversations and the partnerships and the things that we're working on together. It's just amazing. And it's even the next step of collaboration. And so, some of the other deals that we are looking at doing, like I said, we wouldn't be looking at doing them if we didn't have those other people and those other connections and Owners Club members in certain markets. And it just gives even another level of confidence, because again, it comes back to the people. And my confidence level comes from, I don't know, I don't have to have all of the answers, but now I have a network, I have people that I can go to and I can find the answer or find the person that has the answer.
Yeah, love it. I love the network, man. And like I tell people all the time, whichever community within Pace's orbit is like the best community. And I've been in real estate for over 20 years and going to trainings and going to different seminars and trainings and communities. And man, the culture that is created within the sub two Gator top tier TC and this Owners Club community is second to none that I've seen in the whole industry in my 20 plus years experience. It's amazing. It's a great group of people, always willing to give, and it's just made up of all go givers. Everybody wants to give more than they take away. That's for sure. So
Absolutely.
the last question, man, that I have for you, I know you're busy and you want to get back to underwriting your deals and all of that good stuff. If you were to go back and talk to your younger self, what would be that one piece of advice that you would give your younger self before they took action on that very first deal?
Yeah, I mean, it's to get out of your own way or to get out of my own way, because I was stuck in that, wondering what to do, because I was interested in real estate, but I didn't know what to do and I didn't want to seem like I didn't know. And so even in that conversation that I had with my friend, I had probably been trying to look at wholesale and figure it out. And, you know, the other part of that was I tried to do everything on my own and I tried to do everything the free way, right? Like I was always like, let's watch this next video on YouTube. I wish that I would have, been in some of these communities, gone to some of those, been in those rooms that would have pushed me quicker, I think. I think everything happens at the right time and all that type of stuff. But I think that getting in the right rooms around the right people is super important. And there's something to be said for kind of putting your money where your mouth is, right? It's like, yeah, you can go and learn all of these free things, but the minute you pay $1 or $100, whatever it is, you just have a little bit extra incentive because you're like, man, I just paid for this. I better put it to use. And so I was always afraid to do that. And I think that I would have just got out of my way sooner.
Love it. That's some great advice, man. And if people wanted to reach out to you to get to know you more, or to, bring you opportunities or bring you deals, what's the best way for them, for them to connect with you after the show?
The best way to connect with me is on Instagram, at @the_Jordan_Reyes. DM me a message, and we can get to know each other and hang out and chat and look at deals and do all that stuff. And our buy box is on there. It's also on our website, jordanreyes.me. And those are the best ways to get a hold of me.
Love it, man. We'll be partnering together, I'm sure, very soon.
Absolutely.
So I'm excited to be working with you after that. And so, hey guys, that's a wrap for today's show. And I want to give a huge thank you to Jordan Reyes again for joining us and sharing his invaluable insights. And if you're intrigued about my journey to my first real estate deal, or you want to see extra footage from our interviews with other incredible guests like Jordan, be sure to check out the link in the comments. I'll also have Jordan's contact information down in the comments below. And so you'll just want to click and get that information. Also, when you're there, go ahead and leave your thoughts for us. Additionally, if you're looking for funding for your deals, or if you have deals in capital that you'd like for us to consider, or if you're interested in seeing what we do firsthand here at my office, all the information will also be in the link down below. And if you know somebody who'd be a fantastic guest for this podcast like Jordan was today, your introductions are always welcome. So please do us a huge favor, like and share this podcast on Spotify and on Apple Podcasts, and we'll also have it on YouTube for you. It makes a huge difference. Your reviews are appreciated, and it helps other people that are wanting to become investors as well. So we'll be back soon with more insights and stories on your first deal, which ultimately led to millions. This is Philip Warwick signing off now. Thank you for tuning in, and I'll catch you on the flip side.